Hello there. Welcome to this complete guide to price action patterns. I will cover everything you need to know about price action patterns, including trend reversal patterns, trend continuation patterns, consolidation breakout patterns. I will go through each pattern in detail, and I will also find these patterns with you live on real price charts. Any questions along the way, please let me know below. Let's get started. So on this page are just some of the patterns that I'll be covering in this video. This is a complete guide, and as mentioned, if you have any questions, if you get stuck, if something doesn't make sense, or if you've got something to contribute to this video, then just leave all that below and I'll get back to you. I'll be flipping between an infographic, a cheat sheet that I have on my website, and my price charts. If you don't have access to any price charts, then there are links below with MetaTrader, IC Markets, also Darwin X here in the UK, and TradingView. All are for free. You can download a trading platform and get started. Because I'll be flipping between the infographic and TradingView, and because I'm identifying these things live with you, I don't have any script for this video. I have not prepared any charts for this video. Because that's the case, please bear with me. Be patient with me as we find these patterns together. Okay, the infographic I'm going to use is on my website, which is actualforextrading.com. Click on free stuff here. There's a handsome guy there, look, that's me. So free stuff. It's on step 2, which is technical analysis. If you don't know the basics of price action or technical analysis, such as ranges, trends, uptrends, downtrends, then take this free course. You can just work through this course, learn the basics, including Japanese candlesticks, price action setups. But right at the bottom of this page, we have this, my free price patterns cheat sheet. If I click on that, you can download this too. This is what I'll be using in this video, is going through these patterns. We have basic patterns, trend reversal, breakout patterns, trend continuation patterns. There are 26 patterns in total. I'll be going through all of them with you in this video. Go ahead and download this, and then you've got it for reference on your desktop or on your phone, whatever. Okay. The first 3 patterns are the basic price patterns, how price looks when it uptrends, when it downtrends, and when it ranges. You should know those things before continuing with this video. But I will cover these things very briefly, because what you'll find is all price action patterns are an extension of one of these basic patterns. So if you know how price uptrends with higher highs, higher lows, downtrends with its lower lows and lower highs, and how price ranges between a support and resistance, if you understand those 3 things, you have a foundation to understand all other price action patterns. These 3 create the foundation of all price action patterns. And that'll make more sense as this video goes on. So let's bring up TradingView and let's go through these first 3 patterns, which are basic price patterns. So this is Australian dollar, Canadian dollar. It's the 15-minute chart. As mentioned already, I have not pre-prepared any charts, so please bear with me as I find these things with you. But let's start with an uptrend, which is showing here on Australian dollar, Canadian dollar. And with an uptrend, we have those higher highs and higher lows. This is the key characteristic of an uptrend is each time price rallies, it's higher than the previous rally. And each time price retraces, each time we get a move down, it actually doesn't retrace as far as the previous retracement. It's really important you understand those things, because this will help you to understand other patterns, especially trend reversal patterns. Downtrend, we have a downtrend over here. Once again, we have these swings, price swings, and we have lower highs and we have lower lows. It's really important you understand that. And then down here, we have this consolidation where price moves between a support and a resistance, and it moves between the both and eventually breaks out. When it breaks out, you generally get a trend. There'll be more on that later on. Does that make sense? Any questions? Let me know below. This is real basic stuff. Let's bring up our cheat sheet. Here we go. And let's continue and move into trend reversal patterns. So the first two patterns, number 4 and number 5, are head and shoulders patterns or head and shoulder patterns, and inverted head and shoulders or inverted head and shoulder patterns. And they look like this. If you look at number 4, we have 2 shoulders on either side and then like this big head in the middle. An inverted head and shoulder is the same but in reverse. So we have these 2 shoulders on the side and then this head in the middle. Let's have a look at these patterns in real life and explain them to you. So this is head and shoulder and inverted head and shoulder patterns, which are very common trend reversal patterns. They signal the end of a trend. So going back to Australian dollar, Canadian dollar here on the 15-minute chart, an uptrend means we get higher highs and higher lows. At some point, a trend is going to form a very similar low to the low previous, or a lower low. Okay, so you might have this sort of thing appear, where we have a higher high, but the low is actually very similar or even lower than the low previous. So the swings may look something like this. You then can have a swing high, which is very similar to this swing high here. So not the previous swing high, but the one before. And then you get this head and shoulder pattern. This is what it looks like. Now, to explain this pattern a bit further, the key characteristic of an uptrend is higher highs, higher lows. If price action cannot form that, there's a lack of momentum, there's a lack of buying momentum. The buyers cannot push price any higher, or the sellers are starting to come in and forming lows which are similar to lows before. So this trend reversal pattern, a head and shoulders pattern, is showing a potential shift in momentum. The key characteristic of an uptrend, higher highs, higher lows, is no longer present, meaning the uptrend is coming to an end. The key characteristic of an uptrend is higher highs, higher lows. If you don't have that, price is not uptrending. And that's what this head and shoulder pattern signals, or potentially signals, is a trend reversal. And the reason why it's called a head and shoulder pattern is you have this head here in the middle. That's my head. You can have some ears on either side and lots of hair at the top here. So you have a head, and then you have like these big triangular shoulders, like he's shrugging or she's shrugging. So that's a head and shoulder pattern. Let's see if we can spot some in real life. The 15-minute chart's probably not the best. There's one over here, look, but this is on a smaller time frame. Let's go to this on the 5-minute. Okay, and let's go back to the 22nd of June. Okay, so here we have a head and shoulders pattern. So we have an uptrend. Price is uptrending, like this. Okay, and then this is your first sign that there could be a head and shoulder pattern, or that this trend could be coming to an end. Why is it the first sign? Because we have a low which is very similar to the previous low. So these lows are coming up, they're higher each time, which is a key characteristic of an uptrend. You then have a low which is very similar to the low previous. That does not suggest an uptrend. And I'm trying to really emphasize this point. We then have a lower high, and price starts downtrending. Lower highs, lower lows. This is a head and shoulder pattern. It signals a trend reversal. And what you have to do is keep an eye on the highs and the lows, the swings. And that's a key part, a key identifier when it comes to price patterns. Look at the swings, look at the highs and lows. So what is an inverted head and shoulder pattern? Well, it is the opposite. Okay, it signals a downtrend becoming an uptrend. It means that price can no longer form lower swing highs, lower swing lows, and actually forms something higher or of similar size. And then you get this uptrend. So once again, you have this head in the middle, but it's upside down, and shoulders on either side. So let's say we can just spot an inverted shoulder pattern. Let's just scan through. Okay, so there's one here on the 4 hour. Okay, this one's not as clear because this swing high is actually slightly lower. Generally, these head and shoulder patterns, the swing high here is the same or very similar or higher. Let's see if we can find a better one. If not, we'll come back to that. There's one down here. Look, on the 2nd of April, looks like it's a 1 hour head and shoulder. What did I say? 22nd of April? No. There is one here though, look. I probably went to the wrong year. So this is the 1 hour Australian dollar, Canadian dollar. Can you see the inverted head and shoulder pattern? Can you see a downtrend becoming an uptrend? So we have this downtrend, lower highs, lower lows. Okay, we have a bit of a consolidation here. But then we have lower low. This is your signal. Okay, a high that's very similar to the high previous. We then form a higher low, and off we go. Okay, so here's the inverted head and shoulders pattern. It's the same as the head and shoulder, but signaling the opposite, a downtrend becoming an uptrend. Any questions, let me know below. Okay, so that's number 4, number 5. We then have double tops and double bottoms. So number 6 and number 7. These signal the same thing, but the pattern is different. Okay, let's actually change currency pairs, shall we? Let's do Canadian dollar yen. Let's have a look at this, if I can spot a double top or a double bottom. There's one here. Okay, so once again, think of your higher highs, higher lows, key characteristic of an uptrend. If you don't have that, price is not uptrending. Okay, instead of a head and shoulder pattern where you get this very similar or lower low that then moves into a head and shoulder pattern, with a double top, it's based on the highs rather than the lows. So instead of getting a very similar low, what you get is a very similar high. Okay, or even a lower high. And it's the same principle. Price is no longer uptrending, so this thing could be reversing. The momentum is dying out. There's a lack of buyers. There are more sellers. And those swing highs, swing lows, higher lows can't continue. And that's what we have here. Okay, so we have an uptrend. So price is coming up. And then you'll see we have this sort of price action. So we have a high that's very similar or slightly lower than the high previous. The price action cannot form a higher swing high. The momentum is dying, and then price starts coming down. Let's scan through the charts. Let's stick with this 30-minute chart so we can spot any others. Okay, so there's one here, but I'd say this is actually like a 15-minute double top because it's very consolidated, it's very small. But the same sort of principle, so higher highs. Let's try that again. So we got swings coming up. We then have this. Okay, price cannot move any higher, cannot form a higher swing high, and it comes down. Now with double bottom, it's the same principle, but in reverse. So down here, you have a double bottom. So price cannot push any lower. Okay, so if you think of an inverted head and shoulder pattern, it's based on the high being very similar to the previous high. The double bottom is based on the lows, so the lows being very similar, not the highs. This is a lot to take in, but I do have a cheat code at the end of this video where you don't actually have to remember the name of all these things and be able to identify them perfectly. There is a way to really simplify this. So please bear with it. Obviously learn as much as you can. If you can learn the names, if you can spot these things really well, great. You know, that's a bonus. But there is a way to really simplify this, and I'll go through that at the end of the video. There's actually 2 cheat codes, 2 tips that I have to make this easier. So that's double top, double bottom. The next, if we bring it up, the next patterns here is a triple top and a triple bottom. So it's the same principle, okay, where price cannot push any higher. You get like a 3 top or a 3, sorry about that. But you get like a 3 top or a 3 bottom. So let's change chart again. Euro pound's very choppy. Let's try Euro US dollar. And let's clear this off. Okay, so right away we have like this triple bottom. So this is the 30-minute chart, Euro US dollar. Nice clear downtrend. So we get a double bottom and then a triple. So these 3 bottoms. So price tries a 3rd time. So it's a double bottom. Okay, so you have a very similar low to the low previous. But instead of them reversing, the sellers try one last time to bring price down, and once again we fail to swing lower. It's a very similar low to previous lows. This now may uptrend. So it's like a real life example. It's forming at the moment a triple bottom. Let's see if we can find a triple top. There is kind of this 1, 2, 3, but there's this in the middle. It's a bit messy, that one. Let's just scan through. See what we can find. Here's a nice double top. Triple tops, triple bottoms are not as common, but they are there. So downtrend, swing low, swing low. So we have a double bottom. We come down with a triple bottom. You can even say this is a quadruple bottom. You can even say this is like some sort of consolidation breakout, symmetrical triangle, but we're not there yet. It's a pattern that I'll be covering a bit later on. Double top. Okay, triple bottom, 1, 2, 3. Again, once again, this is the other pattern, like a it's actually a descending triangle that broke to the upside. Once again, that's a pattern I'll cover later on. So I'm going through these quite quickly now. The best thing to do is to use the cheat sheet and try and identify these things yourself by using the links below. So that is the trend reversal patterns. They signal the end of an uptrend, becoming a downtrend, or vice versa. The patterns that signal an uptrend becoming a downtrend, or even just the end of an uptrend, are the head and shoulders patterns, the double tops, and the triple tops. The patterns that signal a downtrend, coming to an end or reversing and becoming an uptrend are an inverted head and shoulders pattern, a double bottom, and triple bottom. So we're 9 patterns in, okay, and we have up to 26. There's a way to go. Have a drink if you need to. I have my usual clear whiskey, my water of ice. But I don't have my whiskey glass today. It's just a standard drinking glass. It is hot here in the UK, but I don't mind the heat. Okay, we'll be spending a lot more time on trend continuation patterns because from my experience these are a lot harder to identify, but I think these are the most exciting patterns in my opinion. So we have kept a good pace, but you might find that pace starts to slow as we get into these more sophisticated patterns. Okay, so what are breakout patterns? So let's go back to how price ranges. Okay, so when price ranges, it moves between a support and resistance. It's moving sideways. We have like a horizontal channel quite frequently. And then when price moves out of that channel, you have direction. So number 10 here, you can see price can move out of the range and then we have direction. So let's just have a quick look at an example of that. Shouldn't be too difficult to find, like a range breakout. Euro US dollar is not the best for this sort of thing. It's been very choppy. Nice clear downtrend here though. Okay, let's see if we can find a clear range. The daily is not the best either for range. I can see lots of other patterns that we'll be covering later on. It's exciting stuff. Look at this downtrend here, followed by a double bottom. This stuff really works. Like you'll see it over and over again. Okay, so potentially if we go to the weekly. Okay, so here we have this. So price is moving between a support and resistance area like this, like a zone, support, resistance, support, resistance, support. We eventually break out. Don't have much of an uptrend. You know, there is a higher swing low, higher high, higher high again. But not quite what I was looking for. We might need to change pair again. Let's try New Zealand dollar Swiss franc. Okay, because there's an actual range on the daily. No, New Zealand dollar, Canadian dollar. Do I even have that on here? I know New Zealand dollar, Canadian dollar is currently in a range, so we can look at a real life example. Okay, let's clear that off. Okay, so we have a range here. Might show better on the 4 hour daily. Okay, so we had this range here. Price is very consolidated. It's moving sideways, not going anywhere. You can see it's really just moving between the support and resistance over and over again. Now, what's likely to happen is when price moves out of the range, if it moves above, we could see an uptrend. If price moves below, we could see a downtrend. And that's kind of the basic concept of these consolidation breakouts. Where price is consolidating, it will eventually move above the consolidation or below. You may then see a trend in that direction. So let's have a look at the cheat sheet again. And let's have a look at some of these consolidations. Okay, so you have a symmetrical triangle, number 11. And this symmetrical triangle, I guess the key characteristic is the resistance is diagonal and the support is diagonal, but they're getting closer and closer together. Okay, so if you look at number 11, the resistance, the line above is coming down, the support below is coming up. So again, the price will get tighter and tighter between the support and resistance. With a horizontal channel like a range, the support and resistance is horizontal. It's going to just continue to move between the support and resistance until it breaks out. With a symmetrical triangle, it gets tighter and tighter and will eventually break out. Okay, so let's see if we can spot some of these things. And I'm being really tested now because, like I said, it's not always easy to spot these things. I would say symmetrical triangles are not as common as other patterns, other consolidation patterns. The whole horizontal channel is definitely the most popular consolidation, but you need to know them all. Maybe we'll try a 5 minute. Might need to change. Euro Australian dollar. See if we can spot a symmetrical triangle. I did say you would have to be patient with me. So there's one here, but it's not the best. So I do want to find another one. But the principle is, you have this diagonal resistance and you have a diagonal support like this. Let's bring this further. And they're moving closer together. Diagonal resistance is coming down. The diagonal support is coming up. If this had just perhaps bounced off the resistance one last time, it'd be a bit clearer. It's not the best example, but this is the principle. Okay, is this sort of diagonal support and resistance, which is really tightening price. See if we can find something else. As I'm looking, look for patterns yourself. There's actually like a symmetrical expanding triangle here, so it's in reverse on a lower time frame. Okay, let's try the other chart. I did say you'd have to be patient with me, so please bear with me. Okay, let's try an hourly chart. Let's see what we can find. Now at the end of this video, I'm going to show you a much more simple way to spot these things. Okay, and I'm not going to use that tip now because I don't want to confuse things. I want to cover all the patterns first. I can see so many patterns, but I can't see a symmetrical triangle. I did say these are harder to spot. Let's try Euro US dollar. Well, let me just go back on that. They're not generally harder to spot, but they are not as common. That's what I wanted to say. So they're not as common as other patterns. Okay, we might have to give up on this. Okay, so once again, there's one here, but the breakout's not great. So Euro US dollar with this diagonal resistance is coming down like this. Okay, nice test, 1, 2, 3, and we have this diagonal support that's coming up like this. 1, 2, 3, 4, perhaps 5 tests of the support. Unfortunately, the breakout is not great. So we get this breakout. Ideally, we would see something like this. Now, this is a good example, though. This is a good lesson for you to learn. And that is, these things are not guaranteed. You could have spotted this symmetrical triangle. You could have waited for the breakout. You could have gone short when price broke out, anticipating a downtrend. The price actually moves up and moves above the symmetrical triangle. This is what trading is like. So this is a good example of, or it's a good lesson for you to learn, is these things are not guaranteed. Okay, there's one potentially here. It's a bit messy. It's not quite what I was looking for. But you have like this sort of thing where price is moving between support and resistance. Then we have this breakout, a nice big uptrend. Now, it's even harder to spot an expanding triangle. It's the same thing, but in reverse. So you still have a diagonal resistance and a diagonal support. They're actually getting further and further away from each other. And I don't know if it's worth the effort of trying to find one of them. Though I did spot one on a lower time frame. But But what you're looking for is like an expansion rather than a contraction. And then once again, you're looking for that breakout. I won't waste my time trying to find one for you. Number 11, number 12 are a lot less common. They're more rare. They are effective though, as effective as other patterns. They're not guaranteed, as demonstrated in one of the examples. But they are patterns. They are consolidation patterns, and they do work. So when price breaks out, you can get an uptrend or a downtrend. Okay, we then have a bearish rising wedge, and we have a bullish falling wedge. Once again, these are triangular patterns. They're support and resistance that are getting closer together. So they're contracting. That's the same for both the bearish one and the bullish one. So if you look at number 13 and 14, the price is getting tighter and tighter between that support and resistance, and eventually breaks out. What is the difference between these and the symmetrical triangle patterns? That is, the symmetrical triangle patterns, even though they're diagonal, their support and resistance is actually sideways across the chart. Okay, so if we go back to the chart here, I probably didn't leave them marked, but with this pattern here, you can see it's very clear, it's symmetrical. You know, the diagonal support and resistance is symmetrical in the sense that they're very similar in their gradient. And if we were to draw a line here, you'd have a symmetrical triangle. Whereas with these other patterns, these wedges, this rising wedge and falling wedge, the diagonal support and resistance isn't necessarily symmetrical. Okay, they're actually just tightening. Let's get rid of my website because it keeps popping up. Okay, so what you kind of have, and we can do it probably here, okay, is you have a diagonal support and resistance, and once again, they are tightening, they're getting closer together, but it's not symmetrical. The gradient is different. Okay, can you see that? Resistance, resistance, support, support, and then we break out. So we can spot some more of these. Actually, this is almost symmetrical, I'd say. Okay, so this resistance, and we have this support here. I would say it's a symmetrical triangle, so after all that, there's one here. Once again, the breakout wasn't great. Let's say we can spot some more of these sort of consolidation breakout patterns. Might need to change my time frame. Okay, so it's a nice one here. So here's the diagonal resistance. Nice big one. Does this fit? Yeah, so here's the diagonal support. You can see they're not really symmetrical. They're not moving sideways across the chart. They're actually coming down. Okay, so that is this one here, a bullish falling wedge. Okay, so if the diagonal support and resistance is coming down, you're anticipating a bullish breakout, which happens. Then price uptrends. If the support and resistance is moving up, then you're expecting a bearish breakout. Okay, and then price could move down. Let's change to pound Swiss franc. Let's see what we've got on this chart. Okay, so looking for sort of ascending diagonal support and resistance with a bearish breakout. So something like this. Okay, so they're not symmetrical. You're like this wedge. Price breaks it down. The support becomes resistance. And we get kind of a downtrend. You know, price definitely moves lower than the pattern. Trend continuation patterns. There are a number of patterns here, 3, 6, 9, 12 of them. Patterns 15 to 24 are all patterns that will form in a retrace move. Okay, so if you think of, say, an uptrend, you swing up, and then in the retrace move, when prices form in the swing low, that's when these patterns will appear. And what you're looking for is a break of these patterns. So in a way, they're consolidation patterns. When price breaks out of the consolidation, you're looking for the trend to continue. So these are consolidation patterns that happen in a retrace move. So if you're following a downtrend, when price breaks below, such as the bearish flag here, number 16, that's your signal that price could now start its descent lower. It can move lower. If you're in an uptrend, if you're looking to trade an uptrend, you're looking for a bullish breakout. Now, a lot of these patterns are very similar. It's just really based on the support and resistance, the direction they're heading, and if they're diagonal or horizontal. So you can see with the bullish and the bearish flags, so price is in a retrace move on both of these, but price is moving in a channel. Okay, so they are diagonal support and resistance, but price has formed a channel. They are parallel. Those lines are parallel and they form a channel. When you come to pennants, so bullish pennants and bearish pennants, these are actually symmetrical triangles. This is symmetrical triangle here, number 11, but as part of a trend, and they show on the retrace move. You're looking for the breakout to follow the trend. Wedges, so the bullish falling wedge, the bearish rising wedge, that's the same as these wedges that I just tried to cover, 13 and 14. Once again, they're part of a trend. Okay, they show on the retrace move. We then have ascending triangles and descending triangles. The reason why these are different to all these other triangular patterns is you have a horizontal support or resistance and a diagonal. Okay, so you have a horizontal and a diagonal. You can then have rectangles, which are ranges that form within a retrace move. Once again, a breakout of these ranges, as long as it breaks out in the direction of the trend, that can be a signal that the trend is going to continue. So back to the charts, and let's identify these things. Let's go back to Euro US dollar. I did like the chart here. Okay, so let's have a look and see what we can spot. Okay, so we have an uptrend. And this stuff is going to be magic. The trend continuation patterns are really the best patterns. And I think you'll identify things in this trend after this video that you wouldn't have identified beforehand. What I'm going to show you is quite revealing. It really helps you to be able to trade trends much better. So we have an uptrend here. We have swing highs, swing lows. And these trend continuation patterns are always going to happen in these retrace moves. Okay, and the breakout, as long as it breaks to the upside, that's our signal to buy, because price could then go for a swing high, and you'll see that happens a number of times. So let's have a look at this retrace move here. Okay, and what we have here, this retrace move, is an ascending triangle. So we have this horizontal resistance and diagonal support. This is a horizontal resistance here, diagonal support. This is an ascending triangle. When price breaks above the triangle, that's the signal that the uptrend is going to continue. It might even show better on a 1 hour chart. Not quite. Okay. Price swings higher. It then enters another retrace move. And this time, it looks like we have a flag, meaning a channel. A retrace move in a channel. Okay, so let's go back to the cheat sheet. It's this, a bullish flag. The retrace move is in a channel, so number 15, and the ascending triangle, number 21. So have a look at them. and look at the price action that we've marked. Once again, price breaks above the channel resistance. That shall signal to perhaps go long. And over here, price is in a retrace move again, so price has swung higher. We're in a retrace move. What is the pattern? Can you see anything? Potentially another channel, I would say. Okay, potentially another channel here. If price breaks above it, we could see another swing higher. Let's see if we can find a downtrend and see if we can spot any more of these patterns. Okay, let's do another pair. Pound US dollar. This is uptrending at the moment. Oh, look. Look what I have marked. Okay, so price uptrending. We're in a retrace move. And there's a pattern here. What pattern is it? If you know it, I'll be impressed. Okay, so look at the trend continuation. Can you spot it? Okay, I would say it's a falling wedge. So with this diagonal resistance and support. Okay, is this based on the 1 hour? Yeah. And then if price breaks above it, it could swing higher. Okay, which pairs are downtrending? The dollar. Okay, so let's have a look at some dollar charts. So we can spot a downtrend and spot any patterns. Okay. So nice clear downtrend here on the 4 hour. It's really a daily trend. We have another triangle pattern here. This is a descending triangle. Okay, so price forms a lower, swing low. It's almost a head and shoulder pattern, or it is a head and shoulder pattern, isn't it? Shoulder, head, shoulder. Okay, and then in this retrace move before price swings lower, we have a descending triangle. So it's a horizontal support with a diagonal resistance. Once again, price closes out, it breaks below, and the trend continues. Now, I think I'm making this much harder than it needs to be. So it's probably time that I give you your cheat codes. When it comes to identifying trend continuation patterns or any patterns, use multiple time frame analysis. So if you spot a trend on the daily, look for patterns, say, on the 4 hour. Okay, if you're looking to trade a breakout on the daily, go to the lower time frames, see if you can spot any patterns that agree with your breakout direction. So use multiple time frame analysis. And let me demonstrate that by going back to pound US dollar. So we have a nice clear uptrend here on the daily. Okay, we have a retrace move here, a retrace move here, a retrace move here. Price is now in another retrace move. You can see it's very hard to spot any patterns in these retrace moves. Because they're so small, we've only got a few candles, maybe 10 in this retrace move. It's not enough to form a pattern. So this is where multiple time frame analysis comes into play. So if I now go to the 4 hour, say, or the 1 hour, I should be able to spot patterns, okay, on these retrace moves that I can trade. So this current retrace move that pound US dollar is in, okay, there's a couple of patterns that we could draw. Okay, one is this, like a wedge pattern. So if price breaks above this resistance, that could be the signal that this retrace move on the daily is coming to an end and price may swing higher. Okay, let's have a look at other retrace moves. Okay, what do we have here? Do you know what this is? Finally, I've seen one. This is like an extended symmetrical triangle. So another retrace move, when price breaks above it, it moves higher. Okay, there's another retrace move over here. Okay, this one looks like maybe a channel, though the lows are a bit low down here, aren't they? There was a channel. There's an inverted head and shoulder pattern as well. It's a retrace move over here. Okay, potentially an ascending triangle, but we only had one top here. So that's really the key, is to use these lower time frames, use multiple time frame analysis, because you won't always spot the patterns on the chart you're watching that has the trend. The other key point is direction. You don't need to know all the names of these patterns. You don't need to be a pattern master if you know the direction you want to trade. If you want to buy pound US dollar, just draw what you can see, put in the diagonal levels, put in the horizontal levels, and trade the breakout. That is in the direction that you want to trade, so a bullish breakout. If you're looking to sell Canadian dollar, Japanese yen, you don't need to know the name of all the patterns. Just draw the diagonal levels you see, the horizontal levels you see, and trade the breakout. So you can actually trade these patterns without actually knowing what patterns they are, because the name of the pattern is not important. It's not going to make you more profitable. But being able to spot some sort of pattern and then a breakout can make you profitable. So let's say that I want to trade US dollar yen, which is in a consolidation, so let's not do that. So it's pound New Zealand dollar. Obviously wait for the breakout. I'm trying to find one that's trending. Okay, well we can stick with these charts. Pound Australian dollar. So price is uptrending on the weekly. Let's say we want to join that trend. Well, on the daily, if we were to identify this consolidation, okay, horizontal channel, potentially also an ascending triangle, like that. If we wait for the bullish breakout, we can get into the trade. You don't need to know this is a horizontal channel. You don't need to know this is an ascending triangle. You just need to spot the support and resistance. It's all based on support and resistance. Let's try just one more, and then I'll draw this video to a close. Let's find a pair that's in a retrace move. So let's say we want to be going long Australian dollar, Swiss franc. If you can draw the support and resistance, if you can identify the potential channels, okay, or the symmetrical triangles. Okay, you don't need to know that's what they're called, but if you can identify these things, then all you need to do is wait for the breakout. Now, I'm not suggesting that is a profitable way of trading. I'm not saying this is the best strategy. I'm just trying to teach you how these patterns can be used as part of trading. I tried to cover a lot in this video in a very short space of time. I am here to help you. If you want to try and identify these patterns yourself and send them to me, then please do. Samuel@love-the-pips.com. Thanks for watching. If this has been helpful, please like, please subscribe, please leave an encouraging comment in the section below, and I'll speak to you in